ICT is not for beginners, and if you're watching this video, then maybe you are feeling confused. Maybe you are overrun by everything that ICT and ICT YouTubers teach. But this video, we are going to change all of that. As in this video, I'm going to help you to simplify and understand ICT. Not only am I going to explain everything that a beginner ICT needs, but also tell you what you should be focusing on if you want to reach profitability with ICT. We are going to talk about 3 key examples, and I'm going to show you also examples on the chart so you can leave this video with a lot of new knowledge. And if you stick until the end, you will be able to have that golden nugget that maybe is what you need in order to get to that consistent profitability stage, at least in terms of technicals. But as we know, technicals at the end of the day, they are in your first year the most important thing. So let's jump into the charts and let's talk about the best ICT strategy for beginners. So let's talk about the best ICT strategy for beginners. I summarized this at first with what every ICT trader needs to understand, because this is going to make it easier for you to understand what you should be focusing on the most when 1, you're looking at the charts, and 2, when you're looking to learn a little bit more about ICT, this is what you should be focusing on. So first one is time and price. This is something that is pretty much talked about all the time with ICT, and in this video we are going to talk about time and price. Then you also need to understand manipulation, which is what ICT refers to as Judas swings, and how that applies with price. Then you also need to understand stop loss placement and target placement. And in this video, not only am I going to explain the entry model that you are going to use, but also where you should put your stop loss in a mechanical way and where you should put your target in a mechanical way. And then last but not least, well, we will leave it to last. So let's first talk about time and price. You should be trading either during London session or New York session. And now some of you might be asking, well, I don't know when London session and New York session are. Most of you probably already do, but either way, London session is between 3 a.m. EST and 5 a.m. EST, which is New York Standard Time. New York session is between 7 a.m. Eastern Standard Time and 10 a.m. Eastern Standard Time, which if you go onto your charts, you simply need to change the time zone into New York. And then you will always be in line with what ICT calls the London session and the New York session kill zone. So that is time, but what about price? Well, when it comes to price, this is where we need to start thinking about the manipulations and the Judas swings and how they apply. So if we talk about time and price, we need to think about manipulations. Now, we are going to put all of these together to give you basically a no discretion strategy. But you need to understand that the main question that you need to ask yourself, because this is going to help you, is who is making money? If everyone is making money, you wait. And the reason for that is liquidity. And we will see an example of a trade that I took yesterday that I could have easily taken a loss if I just thought about price. But since I thought about time and price, I was able to profit yesterday. You just have to understand that if everyone is making money, you have to wait. And the reason for that is, once again, liquidity. Because let's say a London session just opened and the market just shoots straight up. Everyone that longed in London session is making money, and that is not realistic, and that's what we are going to see in this video. And that is what time and price is about. That's how we are going to put time and price together, because what you are going to do is you are going to look at London session and look at New York session with a whole new set of eyes. But how do I know if everyone is making money? And how do I know about liquidity? And what do you mean manipulation? Well, this is where we come to one of my favorite concepts of ICT, which is the power of 3. And the power of 3 simply states that you have accumulation, manipulation, distribution, and then the close. Because this is what is going to allow a candle to look like this. If we go back to euro dollar on the daily, one of the things that you are going to notice is that it's almost rare that there is a candle that does not have 2 wicks and 1 body. Now, some of you might think, well, that is too simple. Yes, that's really the goal. Our goal is to have a simple trading edge. So if we go onto the charts, once again, what can you see? From here to here, you have wick on both sides wicks. There's no candle that doesn't have a wick. This one is very, very small. This close is very, very small. But all of the rest, you have a huge manipulation wick followed by the expansion. In all of these days, you can see 2 days that it didn't really have this wick at the low, which means that all of the other days, let's say 95% of the days, we are going to have the daily open. So let's start thinking about daily. The daily open, you have the range, you have the move lower. This is the manipulation. This is going to be the wick. And what are you going to wait for? You are going to wait for a sweep of liquidity, a market shift, and your goal is going to be to enter in a trade below market open. Even though I'm also going to show you how you could enter in this phase. Now, a lot of people keep it way too simple, just with the ICT power of 3 on the daily. But you also need to understand that the power of 3 is actually used not only on the daily, but also, and this is what changed my trading the most, so you need to listen to what I'm saying, also on the sessions. So all of a sudden, look at what I'm telling you. I'm telling you that you have to understand time and price, and you have to understand manipulations. And all of a sudden, I'm giving you everything. I'm giving you time and price, which means focus on London session, New York session. And then here, you are going to apply the same concept of the power of 3. So not only are you going to look at daily open, but you are also going to look for session open, because the daily open is going to give you a very clear way of trading the market. But once you master the session open, this is when your trading is going to change the most, because all of a sudden, if you just change the daily open into the London open, a whole new world opens up to you, or New York open. And that is where I want you guys to apply the exact same concept. Because a session is going to open, then it's going to manipulate, and then it's going to move in the direction that we want it to go. And that is why I said focus on who is making money. Why? Because you don't want to be in line with everyone that is making money. The reason is because everyone loses money in the market. If New York opens and it just moves up, then everyone that opened a trade long in New York is making money. Yet, if everyone that opens a long during New York starts losing money, and that's why you also use liquidity, starts losing money during this manipulation phase, then already you are more profitable than them because you are not losing money. And then you wait for the shift that is going to mark when the market wants to move in your direction, and this is where you execute. Your goal is not to try to catch this move lower. Your goal is to catch this distribution, and that's what I'm going to tell you to focus on. So daily open and session open are going to be the most important concepts that you should think about. And for power of 3, you simply need to ask yourself, who is making money? And then after this manipulation, what you are going to look for is for displacement. And displacement is basically a market shift. So it's going to be the same. Even though displacement is an injection of momentum, it doesn't have to be a shift. In this case, we are going to use it as a market shift. That's where you have the injection of momentum, and that's where you have the price displacement leaving fair value gaps in order blocks. And that's where we are going to execute. That is our entry. After we have the ICT power of 3 on the session, we have a sweep of liquidity. We wait for the market shift. We wait for the injection of momentum in our direction. You wait for price to leave fair value gaps in order blocks, and then our entry is going to be at the order block that is going to be formed. And so here it would be if we retest and then we move higher. Now, the stop loss placement is going to be 3 pips below the low or the high, never below 10 pips. Which means if your stop loss is supposed to be 7 pips, at least put it at 10. And this is going to give you room to be a little bit wrong when you are in the market. The same thing with the 3 pips below the low or the high. A lot of people say, oh, just put your stop loss below the low or the high. But what I'm telling you is that you want these small wins. You want these trades that even though you might have the drawdown, even though you might be a little bit wrong, at the same time, you still have the possibility of making money, because I have been wrong multiple times and I still made money. And the reason is that I am conservative when it comes to putting my stop losses. And then the target is going to be the lowest hanging fruit with a minimum 1 to 1.5 risk to reward. Now, with a minimum 1 to 1.5 risk to reward, you need at least a 40% strike rate to be at break even, which you will have. with this last concept. And that's where we go to the last concept over here, which is daily bias. The daily bias is probably the most important concept, and I have a full video breaking it down on how to have the daily bias. If you guys want me to make a full video on how to determine the daily bias and an exercise on how you can master the daily bias, then let me know in the comments. And obviously in this video, I'm going to briefly explain how to look at the daily bias. Okay, so now let's put it all together. So this is the Euro US dollar chart. The first thing that we have to understand is what is our bias. And from what I can see in the market, we had the sweep of the low and this move up. Then we had this big retracement and we have this big shift. So now I'm expecting the market to react from this fair value gap and move higher. So basically on the daily, what you do is you simply understand the market direction and then you look, okay, we've just reacted out of a bullish Peter array. So now we are looking for bullish liquidity, meaning a high, or a bearish PD array. And what you can see here is that we have the top of this extreme fair value gap, it reacts, boom, then leaves this order block and this fair value gap and reacts. So now what am I looking for? I'm looking for the market to move lower, to tap the fair value gap again. Why? Because when the daily opens, the daily is going to manipulate first, right? So that's what we've understood from the power of 3. So where are we going first, which is the daily fair value gap, and then where are we going next? And there's two clear targets that I have, and it's this high and this order block right here. So I want to either take profits at this order block if it's good enough because it's a daily order block, or at maximum here at the high. Now, if I go onto the charts, I need to ask myself, let's remove these. These are not important as of now. But what do we have here? We have huge manipulation and reaction, but now it's a new day. So with a new day, we are going to have the daily open. And then once again, you ask yourself, where is the market going first before it goes up? And that's where I have this inverted fair value gap right there, which goes in line with this fair value gap. And so I'm looking for the market to move lower. Then what am I looking for? I am looking for London session, power of 3, not only on the daily, but also on the session. And then I'm going to enter. So let's jump onto London session. There we go. We have the first range and the first move lower. So everything that happens below here, it's manipulation because our bias is bullish. So let's go down to the 15 minutes. So don't forget that anything below this daily is manipulation. Then we have this push lower. It moves extremely towards this low, sweeps. So all of a sudden, what do we have? We have London open, we have manipulation, sweep of a low, and what you do is you go down one time frame, you identify where the market shift is. In this case, for me, it's here. So now you want to see the market reacting bullish, closing above, and this is your entry. So we have still move lower. The market starts reacting bullish. This would be your first entry if you want to be more aggressive. And this is an entry that I personally also teach, but this would be the first entry. But if you want to be a little bit more conservative, you wait for the market to react, close above. So now you set your entry with a stop loss at 3 pips below. So this is at 9 pips. You put it at 12. Now, why do you want to do this? Because you want to allow the market to range here, possibly sweep this low again, and then move up without tagging you out. Because one of the things that you will understand with the daily bias is that we are going to be right more than we are wrong. And with that, what do you want to do? You want to give yourself room when you are wrong for the market to still prove you eventually right. And this is obviously what I would tell anyone that is just starting out trading or is still doing the break-even dance. It's like most of you, how many of you, and leave it in the comments, how many of you know how to read the direction of the market, but you still get tagged out and then the market moves in your favor? And if you do, then make sure to check the first link in the description because I can help you. And then we have our entry. We get into a little bit of drawdown, and this is once again where if you are just choking this trade because you want a 5 pip stop, you want it below this order block, you are getting tagged out, not understanding, hey, just give yourself room. The target can easily be 1 to 1.5, which is the lowest hanging fruit possible, because not only now do we have the reaction out of the fair value gap that we wanted, we have extremely low hanging fruit because this is a little bit above this Monday high. And then you can target just the next liquidity. And look at what happens after. The market moves, and there you go. You have a very, very quick and easy trade. Now, some of you would be aiming for this high. And that is completely fine. I would completely understand if you want to aim for that high. And you can, because most of the time the market will react the way you want it to react if you understand all of these ICT concepts. And so let's say that you're aiming for that high, but let's put that as a new trade. So this would be the second trade. The first trade would be a 1 to 1.5, and there you go. You have a 1 to 1.5. This is going to work more times than it doesn't, and because of that, you can already be profitable if you master these concepts that I just showed you here. Wait for London Open or wait for New York Open. Wait for the manipulation of the market. Wait for everyone that was long on the day or during London to be running a loss, and then you enter when the market proves your direction. And look at how clean it plays out. So this is just one example, but one of the things that you will notice is that the market did not reach the final target on this day, which was Monday. But the daily bias was still very clear that we were going to go for the high or at least towards the order block. And one of the things that you will see, and this is like the most beautiful times to trade, I can tell you that because I did, and I again passed one full challenge, made $20,000 on the challenge to pass the verification stage. And then because what happened is that the market didn't even tap neither the order block or the high, and it started breaking lower. So the market starts moving lower, and this is where a lot of people start thinking, oh, okay, maybe the market is going to go to the lows now, I'm wrong. And at this point I thought, no, I am 90% sure of my daily bias. Just me and everyone in the community. And so I approached the market exactly how I told you to do, which is I'm still looking for longs. And so what do I see? I see a high probability area here to long the market, which is a 15-minute order block. Then this gets tapped into, and directly as soon as market opens, we have a huge move up. Now this is where you have to be focused. Look at how this is London Open, 3 a.m. Eastern Standard Time. Notice how there was no manipulation. So anyone that longed the market as soon as London opened, they were in profit. But again, you need to ask yourself, who is making money? If everyone is making money when London session opens, then what did I say? You wait. That's what you have to do. And I know some people that entered in this long, and I completely get it because it would be the same idea. And again, don't forget, at least 10 pips. But I noticed something. No manipulation. And I was like, okay, so now there's a clear low to target right here. And this is a lot of liquidity. So again, the market looks beautiful to reach all of those highs. And so what happens a little bit after? The market starts breaking lower. Everyone is bearish now. But what do? I start to think, well, no, I'm actually bullish in this market. And that's where I wait for the market to shift. It gives me this shift. This is the order block. This is a little bit more aggressive. And this is where I start executing 10 pip stop. So I am okay with being wrong for some time. Not only that, but this basically covers the full order block, which makes me even more confident in this trade. To the high, to the order block, I have a 1 to 1.1, and to the high, I have a 1 to 2. Let me ask you, would you not be happy with a 1 to 2 or even a 1 to 1 when it's almost sure that you will get it? So notice how this trade develops. I get tagged in, a little bit of drawdown, still respecting the order block, and then the market moves all the way towards the high. There you go. The high is gone. Now, for transparency's sake, I closed the trade here because I was doing the challenge. And so I closed the trade here to pass the challenge. But overall, this is how simple we can keep it. You just think about time and price. You wait for the manipulation, which once again is time and price. By waiting for London session or New York session, you set your stop loss and targets in a way that you will be right more than you are wrong, which this is a technique in of itself. And then you focus on the daily bias. If you can do these 3 things, these 3 or 4 things, you will be a highly profitable trader. And how many of you have tried and it hasn't clicked? I understand, like, there's so many things that go into this, and so many people are doing the break-even dance, or they're losing a little bit. They've tried and tried, watching the YouTubers, watching the strategies, watching everything, and it still hasn't clicked. And let me tell you, the same thing was happening to one of my students. I struggled for most of 2023. I received my first funded account. I also thought I cracked the code, and they did not receive a single payout after 6 months. They couldn't handle the emotional ups and downs, and so they went all in and lost it all. And then once I opened the simple trading edge, they were like, goddamn, this is truly a thing of beauty. Because of my break-even dents, I had a lot of screen time to my name. And then after learning with me and the community, they got their first profit split. The first payout of the year. Well, the first profit split of the year. You know how happy I was to see this. And this is not the first person to do it. This is what has been taught in the Simple Trading Edge. Everything that I've told you before, you can make it easier for yourself if you have a community around you and a mentor that actually cares. And I can guarantee you that this is going to be one of the highest quality courses and communities that you are going to join. And so if you are looking to have similar results to me and similar results to the people in the community where they're getting the certificates, they're passing more challenges, they're seeing EU behaving as they wanted, profitable trades, just an overwhelming amount of profitable trades, then make sure to check the first link in the description. I can guarantee you that it's going to be one of the highest quality courses that you can buy. We have 2 live streams per week and 2 market breakdowns every single week, followed by daily analysis. So I hope you guys enjoyed. I hope this was helpful. Even if you don't join the Simple Trading Edge, then make sure to still apply all of these concepts because it's going to make a hell of a difference in your trading, just like it has to everyone in the community. So I hope you guys enjoyed, and I will see you next week. Peace.